Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a three-wave corrective structure in the yellow WXY, after which we then aim for continuation to the upside. Inside wave W, we have a regular flat, a three-wave A, three-wave B, and a five-wave C to the downside. Wave C hit the 1-to-1, which is a common target for a wave C taken from the start to the end of A to the end of wave B. After wave W, we then have a wave X being an expanding flat, A, B, C. Wave B moved to the downside, touching the 1.236 to the 1.38 Fibonacci, taken from the low to the high of wave A, which is a common target for a wave B in an expanding flat, after which we then count a 5-wave impulsive structure to the upside in a wave C to finish wave X. The common target for your wave C is between the two 1.618s. One 1.618 is taken with a trend-based fib extension from the low to the high of A to the low of wave B, and the other one is a normal Fibonacci pull starting at the high of your wave A to the end of your wave B. After wave X, we then look for a zigzag to the downside in a wave Y. A zigzag in wave Y is also the most common structure, so we then look for a 5, a 3, and a 5-wave move to the downside. The common target for your wave Y is between the 0.618 and the 1.236 trend-based fib extension taken from the start to the end of W to the end of your wave X, giving you a target between 63.2k and 54.4k. The most common target, however, is always the 1 to the 1.236, so that would be 57.8k to 54.4k. But nonetheless, we are inside the common target area, and the 1.618 is an extension target. That one is uncommon at 49k. If we then zoom in to this wave Y and observe this zigzag ABC to the downside in a little bit more detail, then this is what we are looking at. So we have a diagonal in a wave A where all of the waves are three-wave structures. So a three-wave move in 1, in 2, in 3, in 4, and then eventually in 5 to finish wave A. A short and shallow three-wave corrective structure to the upside in a wave B, only touching the 0.236 Fibonacci taken from the start to the end of wave A. Now the 0.236 is an uncommon target even for a wave B, but it is more common for a wave B compared to a wave 2. So therefore preferably we are labeling this as a wave B top and then look for a wave C to the downside, which has to be a 5-wave impulsive structure where we then count a wave 1, 2, 3, we look for a 4 and another wave 5 to the downside. And the reason why preferably we look for at least one more low after a range is because of the volume as well. Wave 3 by far most commonly in an impulse, 1, 2, 3, 4, 5, is the highest volume move and the biggest extended move as well. You can see that price has been moving to the downside, volume locally has been increasing. Therefore, preferably, we are labeling this as a wave 3. Look for another wave 4, and also preferably your wave 4 is at least the same amount of time as your wave 2, if not longer, as most commonly a wave 4 takes more time to form compared to a wave 2. And after wave 4, we look for 5 down. Now the target for your wave 4 at the moment is between the 0.5236 on the chart taken from the high of your wave 2 to the current low that we have. Of course, if price decides locally to still move a bit more towards the downside before starting a range, then these fibs will move to the downside as well, as we take them from the start to the end of your wave 3, right? So we have to wait for a range to form. Common target 60.8k to 62.1k. Invalidation for your wave 4 is touching 62.7k. If price would move to the upside and hits the 0.618, the probabilities will switch to bullish, and we're going to be looking for price to move towards the upside. The common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of wave B, giving you a target between 68.5k and 56.6k, which is actually in nice confluence with the 1-to-1 target for your wave Y at 57.8k. So that is quite interesting indeed. Also, inside the target area here for your wave C, we have some additional support, the blue box between 57.9k and 58.3k. The bullish scenario is that your low is in and we're looking for a wave 1, 2 and then a continuation to the upside in a wave 3. The remaining common target for your wave 2 is the 786 at 59.8k, taken from the low to the high of your wave 1. We don't want to go below the 786 really. You don't want to move down towards that 886, especially touching the 886, because once we touch the 886, the probabilities are incredibly low that we're looking for a wave 1, a wave 2 and then a bigger wave 3 towards the upside. Now because price with this first structure to the downside already retraced to the 786, we can't really look for an ABC zigzag, for example, right? So preferably, if we are thinking about a wave 2, we end a corrective structure where we are right now and then look for price to move towards the upside. The issue is that the pretty much only structure that ends a correction at the low is a triple zigzag, a WXYXZ, which is an incredibly rare corrective structure where inside wave W, then we have X, then we have a Y, X and a Z. We count zigzags, right? So a triple zigzag, meaning a zigzag in W, Y, Z, but also wave X's are most commonly a zigzag structure. Now, wave Y did touch the common target for a wave Y in a triple zigzag, taken from the start to the end of W to the end of X, touching the 1-to-1, and we are currently at the common target area for your wave Z between 60.4k and 59k. And as you can see, that 59k target for the 1.236 here is actually just above the target box that I have down here, which of course is not really ideal, but if price can move towards the upside and touch 62.7k, then well, the probabilities might increase for a WXYXZ, but in general it is a very rare corrective structure and we prefer to look for more simple structures. Now inside this wave 2, of course we can also count a zigzag to the downside in a wave ABC, and a zigzag is a common structure in a wave 2, but the problem is that you are going to retrace so deep that you are gonna hit the 886. You can see the target for your wave C, the most common target, is in confluence with the 886, and that is exactly the fib that we don't want to hit. So therefore we're not really looking for the zigzag ABC in wave 2. WXYXZ triple zigzag would then be the preferred scenario, and it's weird to say because a WXYXZ is simply incredibly rare. Now if we then go to the price action of today and observed what happened in this range, then we made a low on top of support. Interesting. However, I also had the support box here which turned into resistance the moment price fell through, and you can see that at no moment in time we passed the resistance here. There was no reason to be bullish. We did have some bullish CVD divergences here, price moving to the upside. The bullish CVD divergences did play out as we took the high here, but after hitting this level over here and again rejecting at the box, we moved down, sideways structure, creating bearish CVD divergences, which you can see over here. So a lower high on price, but look at this higher high on the CVD, right? There's absorption of market long positions with limit short orders, pushing price towards the downside, and especially in a downtrend, these type of small little signals are very, very important. We failed to now hold this support. We are now ranging below, and of course, therefore, this can now turn into a support resistance flip. If we then finally look at the probabilities of the different scenarios, then currently on the daily time frame, the probabilities are higher for the WXY scenario compared to the bullish scenario, and on the 1 hour time frame, the probabilities are higher for a wave C to the downside, where we are still looking for a wave 4 and a 5, so preferably another range, one more drop. Keep an eye on that support to the downside around that 58.2k level, right? And that has higher probabilities compared to a wave Z to the downside, because simply a WXYXZ is very, very rare. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.